Hey guys, this is Simon with Trade and Perform Coaching, doing a trade review for today is Thursday, the 2nd of April. First of all, before we get started on the trade review, this is going to be an ES trade review. Challenging day today. And when I have a challenging day, I kicked ass in CL, right? I had a long position in CL, had a great day there. Didn't have my best day in ES. And so I want to go back. When I don't have my best day in a particular product, I think there's more value to it because to see what you can learn, right? So one of the things that I like to do is go back and look. So before I get started, this is basically going to be a homework assignment, right? And what I'm going to do is in shorthand, write down what my day would have looked like if my day were perfect. And this is something that Dr. Brett Steenbarger and Denise Schul both recommend. You go back and you replay your day as if it were perfect, right? Why do you do that? Puts you in a good mindset and prepares you to trade well the next day, right? Very, 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 very important. So number one, before we get started, important disclaimer, just a couple of things, right? This is for educational purposes only, right? This is my trading plan. I share it with others in hopes that it'll make them a better trader. It's not perfect, right? It may not fit your risk profile. It's very aggressive intraday, day trading of futures, and there's a substantial risk to that, right? Please make sure that the risk is appropriate and that you have a plan for handling losses in day trading. And as always, past performance is not indicative of future results, and you can read the rest of the notice there. That's enough of that. So what we're looking for, we're going to break this down to something very simple, right? When you have a multi-staged trading plan, right? One of the things that you want to do, hold on one second here. Okay, hold on one second here. I see. Sorry, I had to check an order real quick. So please forgive me. So one of the things you want to do is you want to break it down to a simple area. And what we look for in the room is to find where there's stopped out buyers and stopped out sellers, right? It's one of the keys to our trading, right? And this week it got harder than last week was. So I want to go look at that. And all I want to do is retrain my brain, right? So I want to go back to the basics. So I'm going to start at 9 a.m. where I start trading here. And I'm on a 3-range bar because the volatility has gotten higher, right? So I'm going to start right here at 9 a.m. I don't trade before 9 a.m. Okay, so when I look at 9 a.m., right, what I'm looking for, the green waves are buyers, the white waves would normally be red, and those are my sellers, right? And that's what this algo is effectively telling me, right? And it's letting me identify where there's buyers and sellers. And what I'm looking to happen is to see those buyers and sellers stopped out. So let me give you an example. Right here, see this buyer? So normally what I want, so let me draw this out for a second so everyone can see this really clearly. So normally what I want to see is I want a down market, right? I want this buyer to get stopped out. I want to get back above that buyer. And then I want to get him backside tested for a push up. And it comes in varying degrees, right? So the first thing you need is some kind of rotation down that would tell you, hey, there's been some sellers present so we can trap somebody. That makes it harder when we're trading simply in one direction, straight up or straight down, right? So let's go to the next piece of this puzzle real quick. And let's just kind of go through our day. And what we're going to do is mark it down as we go through what would be likely. So this buyer right here never gets stopped out, right? I'm simply starting where the buying wave begins. It doesn't get stopped out. This buyer right here does not get stopped out. There's nothing for me to do here, right? There's simply nothing for me to do on the upside because not only am I not getting if I'm looking long, buyers aren't getting stopped out, but I'm also looking for the inverse as well, which is if sellers get stopped out, right, I want to be able to get underneath that seller, right, for a potential short. I want to see a backside test that basically flip that picture upside down and take it the other way, right? So what I'm trying to teach here, to be very clear, is I have a methodology that I know works, right? So all I'm trying to do within that methodology is breaking it down to one simple view of that particular setup, and I'm going, well, how would have this worked out if I took it through the course of the day, right? So when we're going up, I have to be able to get underneath the seller, right? I need a seller stopped out, and then I need to go underneath and backside test, or I need a buyer stopped out, underneath, get above, backside test for continuation. So we'll see that in a second because it's simply moving up here into the morning, and no buyer or seller is getting stopped out. As a matter of fact, that takes us all the way to 9:35. And you can see that no one here has gotten stopped out on either side. So now when we're coming up, right, so this is the first place I'm going to have an opportunity. I have a seller here, right, I can't get along, right? I've got a seller here, right? And I know this seller here, I'm going to make it really big for you. This seller right here simply cannot get stopped out, because that was the high. So I'm going to come to my next seller. This is my next seller. See that right there? Begins on that bar. Excuse me. Let's make sure it's at least 2 bars wide. It's not. Oh yeah, it is. There it is. There's the first bar here. I'm going to make this a little bit bigger so everyone can see this. There we go. So first seller, second seller. Right in between those green lines. This is my second seller. So if I draw a line right above it, all right, you can see that everyone who sold here, if they put their stop a tick above, they got stopped out. Why is that important? Because now I want to get underneath my sellers. My sellers, I'm going to highlight it in gray now. I've been stopped. I want to get underneath them. I've done that right here. Okay. Now what I want is I want to enter a portion of a position here and a portion of a position here, and I want to stop out with a clear close above this point or getting a long setup at a lower price. So as I roll through, right, you will see that if I did not take the trade in this particular case, if I did not take the trade half size right here at, see when it's not all pretty pictures and look how great and easy it is and you actually have to do a little work, it takes a little bit of extra time. So right there, if I don't take that trade at 25.1150, right, I want to get hit 1 point underneath this. So this is 25.14. I want to come back to 25.13 and get hit. That doesn't happen. And then we have a significant roll. We have a significant roll to the downside. So that tells me 2 things. I can pause for a second. A, the methodology works. If I enter a trade, closed underneath, that was a potential trade, hypothetically, right, from 25.1150 down to 24.90. That is fantastic, right? That's great P&L. No one has any problem with that, right? But what I really wanted was this backside test over here. Now I'm going to keep going through the line. How would have I known where to cover and whether or not I could reverse? So watch. As we're coming down, right? So I'm clearly getting this push to the downside, right? So I'm going to start monitoring where my buyers get stopped out. So this is a buyer right here, right? That buyer gets stopped out right over here. I want to see a clean close with a point of control above, and it doesn't occur there. See how this is a negative bar? And I want this little yellow line, that's another piece of my process, to get above this closed out buyer. So this buyer right here is a potential in the future if we get above them to go higher, but it's not there yet. We're coming down, I get another buyer. This buyer gets stopped out. They're pretty much in the same location, right? And we clearly never get above him or her. Coming on down. So here's the next buyer, right? So again, what do I want? I want a green bar with, so that was buy a tick. It's not enough. It's got to be clear, right? So green bar above, right? And then a backside test. And I want the point of control above. You'll see what I mean in just a second. So now if we come down one more time, right, we'll see in actuality, if we skip all the way down, that this is my last buyer right here. To get stopped out, right? So remember, there's 2 ways of entering. You can either wait for the backside test over here, which would have been a 25.13. If you wait for the backside test, you didn't get a fill. If you took the close of the bar, you took 25.11 and you killed it. That was a 20-point rotation, 11 to 88, 11, 90, 23, 24 points, right? Now look at the other side of the trade. It comes down. Here's my last buyer. I can clearly see that buyer gets stopped out. See that? It gets stopped out. I'm going to make it really big so everyone can see it easily and you're not having to squint. Buyer stopped out, right? Right there. And remember, this is mostly done for the members in the room, so if it's confusing, or I should say up front, if you want to pass to the room, the email is trade, TRADEN, as the letter N, perform @gmail.com, and anyone's welcome to have a 5-day pass. There's zero pressure. I'm not a salesperson. I'm a professional trader. I do this to help out other traders. That's it. Pure and simple. Okay? So as we're coming along, I do charge, but I don't make my living from the room. Right, so I just want to make it clear there is a charge for the room. I am not some kind of a utopian trader. I like to get paid for working, but I like to help people too, and the charges are reasonable. So as we come down, right, we stop the guy out here, and so I'm going to put a line right above my buyers right here. See this? Now, I don't, the way my formula works is from the time we close above, right, which would certainly, if nothing else, be this bar or this bar, I'm going to put a limit. So I'm going to erase the bars above because that makes the process more complex, right? And I'm going to put a line right here, 1 point. So that line is 24.95.75. I'm going to put a line at 26.96.75. And that is your long at 9.57. Okay, so the first thing I'm going to write down is I should have had a short from, right, because this is all hypothetical land, right, because the truth of the matter is I made my process too complex today, and I didn't get paid like I should have. So right now I'm going to put down in a sheet. First trade, short, right, on process. I already know it's on process because I did it manually, right, and it's, by the way, easier to do that after market hours. And then there was a potential, I'm just going to write it down because I'm doing shorthand and I'm trying to learn. 20 points before long trigger. Okay, second trade, right, would have been a long at 24.96.75, this white line right here. Okay, at 24.96.75, how far did that trade go before it either would have stopped me out, right, or set up short for me again, right? And if you look, it went from 24.96.75, and the best I could have done just from eyeballing it right away, let me tighten this up a little bit, would have been roughly 24.09, right? So 24.96 to 24.09 is 13 points. That's the best I could have done. If everything went perfect and I nailed the exit, I had 13 points. But look, that's a lot of wiggle room in between, wouldn't you say? Like, it's not just a little bit of wiggle room, it's a lot of wiggle room, right? And then as we're coming up, right, what are we looking for as this is pushing out? Where's my stopped out sellers, right? So I'm going to flip that work, and I'm going to start going right here. Clearly, seller was stopped out, but I don't get underneath. As we come along, I get another seller here. See this? And clearly, this seller gets stopped. Then I get one more seller right here. See that? There's my seller. Put a line underneath. So look now. So now, let me erase this so it doesn't get too many lines on it. So now I'm going to look at this. I know my seller's right here. All right, it's these two guys or gals right here. We stopped them out clearly right there. I closed underneath. I want the point of control underneath, so it's this bar, right? So I could have either entered at 24.99 or at 25.01. So I'm going to use both entries, 24.99 or 25.01 for my potential entry, right? Backside test, which is what I'm looking for. The next thing I want to know in this is how much heat I took. So if I shorted 24.99, it went all the way up to 25.06 approximately. So 7 points of heat. So why do I want to know that? I need to know how far my stop's going to go right? So 7 points of heat would have been taken, right? What's my potential win there? Okay, well, I can cheat because I can just roll to the right, right? And if I look, as I roll to the right, I get 24, eyeballing it, 90, right? So I would have been 89 to 90. 9 points of profit max. Now, what am I doing? What I'm throwing away is, so see how this trade never would have been stopped if I left this stop, this appropriate stop. Let's just say I use a 10-point stop for each trade given the current volatility, right? If I never move my stop, I take my scale, I actually had the potential of garnering a 24.80 trade out of that 24.99, max 19 points. But I'm going to throw that out because I don't want to look there. And there was this potential as well. Would have I or could have I, right? Would have I or could have I lost money? Did it set up long over here? And I can tell you right now, I believe it did. This buyer right here is going to get stopped out. You're going to register above, you're going to backside test, and it's going to stop you. So now, this is important if you're going to keep the continuity of when you're looking backwards for the day, how you would have handled that, right? Most of my trades don't have more than a 10-point stop. So let's be generous and give it. We know that we didn't want it behind here, right? And the entry would have been up here at 24.99. That's 24.90.75. Let's call it 10 points. So even though we wouldn't naturally be looking long there because there's actually head and shoulders in that structure, and there's a lot of reasons not to be long. It was up into resistance. But let's say we took it so that at least it looks fair when we're running through the numbers, right? So that comes out to long 24.99 minus 10 points. No profit. All right, that was just, you simply took it and it took 10 points away from you. But even with that, you're looking at a max potential 20, 13 minus 10, right? Which means you're still up roughly 23 points on the day. Yes. And that's going into 10 o'clock, right? So let's keep going through the process here, right? So as we come up here, right, we are going to see that again, a buyer gets stopped out. See this buyer, this buyer does not get stopped out. This is still the last buyer, this 24.98 that gets stopped out, right? And you'll see in the process, so it kind of went back to back. See this here, so I'm going to erase because this is where it gets complex. This buyer gets stopped out. We were looking hypothetically long there. This buyer got stopped out and you got stopped. Once you're in this process, this buyer is the next buyer to get stopped out. Now, I want to know something that's very, very important. Not only was that buyer stopped out, but then this buyer right here was also stopped out. You can see both of them get stopped out underneath. And if I put a line on top of both those guys, they're almost identical place. I can see that I closed above right here. So what I want to do, or what I want to try to do, is get this. I want to answer the question of being mechanical as possible, right? What this tells me here is if I had gone long this bar at 25.0175 or at 24.9975, right there, right? I would have ended up, because I can cheat and go look to the right, I had a hypothetical maximum profit of 25.14. Again, so I'm going to write down in my journal, understanding that I didn't necessarily get exactly 14 points, right? But I'm going to write down in my journal, hey, that was a hypothetical, another plus 14, right? So that comes into the strategy of exiting or entering. But I get a very clear picture here really quickly, right? The long above my stopped out buyer at 25.02 would have given me potential of plus 14 points, right? So if you're trading, so you got to get your RR correct on this, right? One contract with a 10-point stop on ES is $500. Not everyone can afford that. But if you trade the micro, one micro contract with a 10-point stop is $50, right? Conversely, it's a $50 win. So, and you just do it by the number of contracts, right? So at this point, I could go look at this point of the day and go, okay, potentially I could be up, let's see, we said 23, 43, 23, 33, 37 points, right? 30 times 5 is $150. So on one micro, you'd be up $150. on one ES contract, you'd be up $1,500, hypothetically, depending on where you exited out of the trade, right? And then you want to keep that flow going. So guys, what I'm trying to teach you is how you go through and look through the course of the day and go, well, wait a minute. How did I do this, especially if I ended up with a day that wasn't as good as it should have been or even negative, right? How did I do that and what did I do wrong? Because when I go back through this day, right, when I erase this and I keep going through this process and I get to 11 o'clock, right? I come over here at 11 o'clock and I go, which seller gets stopped out? And it's clear right here, this seller gets stopped out. I'm going to put a line underneath them, all right? And I can see quite clearly without going through all the deal that right in New York lunch, right, if I shorted the backside test at 25.06 or I took 25.05, that the best extension I could have gotten was 24.98. Now, why is this important, right? Because I took that trade today. I was short at 25.06 or 25.07, somewhere right in that range, right? And I did not take my scale at 24.99. As a matter of fact, I came back when we were up here and tried to grab 2,500 for scale, and I missed. I just didn't get the cover, right? And I went into New York choppy time. So the first thing I want to write down is New York was choppy, right? And it was the smallest extension that I could have possibly gotten. The best I could have done was 7 points, right? And what I was sitting there was waiting for 10 points. I wanted a 24.94 scale. And so I'm either going to have to adjust to that time frame or say, hey, I stopped trading at New York lunch and I'll pick it back up in the afternoon, right? Why is that important? Because if you look over here to the right, right, this, if you try to stick this trade over here through New York lunch, right, and you look at this, this is where I was having all that difficulty of getting an extension. But watch this over here. Had I stayed on process and just taken out scales or avoided, just come in after, right where? 12 o'clock. Okay. So now I can look and go, okay, where are my buyers and sellers stopped out over here? So if you look over here, this buyer right here got stopped out. Again, it's New York lunch, closed above, backside tested, and it pushed to about a 10-point profit. Not horrible, right? But in that process, you stopped out this seller right here. That's what I love about this, is it's telling me where the buyers and sellers are showing up, right? So now I end up 1, 2, 3. It's right there. Hold on a second, but it needs to get stopped out first. So this ends up being my entry, and I can tell you I was frustrated because I was sitting right here at 25.05. waiting for a backside test, and I did not get filled. So what had happened to me by this point of the day was I kept trying to get big pushes and big extensions, and I couldn't hook them up. And I kept letting trades come back on me and stop me out, right, to my detriment, because I was pretty determined that we were going to sweep to the other end of the range, and I may have been too bearish. What this homework tells me at this point is that, hey, Simon, scale at 5 points, scale at 10 points, and leave a trailer if you can do 3 contracts, right? Or 10, 20, 30, however, whatever size you're trading, doesn't matter, right? 5, 10, 5, 10, and then leave your trailer. You've got your stop mostly paid for at that point, right? And I just couldn't push it. And when I look at it this way, all of a sudden you look, had I taken this trade right here at 24.99, added on the backside test at 25.05, this was eventually a huge push all the way down into 24.58, which is what I was looking for. Additionally, you're going to go, well, wait a minute, Simon. Didn't it set up long over here? So let's go look if it's set up long or short. Within this process, all right, so here's my stopped out buyer over here. We clearly don't get above, all right? Here's my next stopped out buyer. I've got to get above them, all right? Here's my next buyer, not stopped out. Next buyer. Okay, this buyer, talking about this guy right here, does get stopped out. If you look underneath, there's the top. And if you look, once again, clearly closed above, backside tested, and pushed. Not only that, right, but if you look once again and you're keeping up with the sequencing, your seller got stopped out. You can put a line 1 point underneath him, so that's 24.8150. So 80.50, Ooh, you missed it by a tick. It's 1 point is usually what I use underneath. So if you didn't take the half size right here, right, you wouldn't have gotten the second half, but you got the final push. I'm going to show you all the way into the low. Now I want to show you one other piece. Well, Simon, what about here? Did I get stopped? All right, so go do the work. There's your two buyers. Do I get the bar with the point of control right there? And you'll see the point of control stayed just underneath, right? Then it rolls over, right? Here's my next stopped out buyer right here. This guy never gets stopped out, right? So it goes here, here. Now I need a line, so I'm gonna clear this all real quick. So now I need a bar to close above this point, right? Because this is the buyer that's getting stopped out right here, and that occurs right there. So what I would do in that case is go long 24.73 and add 24.70.75. And let's go see what happens to us. Bam. See that? And the next question is, well, wait a minute, before we roll off on that, right? Number one, how much heat did you take on the trade? If you took the 24.73 and the 24.70.75, that's an average of 24, roughly 71.50, right? So you want to come down here to 61.50 and go to my 10-point stop survive, right? And that's all the way down here, and you never got anywhere close. Secondly, once it took off to the upside, right, you got a beautiful extension up to 24.98. What does this tell? So let's stop for a second, because I didn't trade this perfectly today, and I kept trying to get huge range extensions, and the market wasn't in the mood to provide those range extensions. Okay, so how do I adjust for tomorrow? Well, what I want to adjust for tomorrow is, number one, I know I need 10-point stops, and I know I need to take a scale at about 7 points. First thing, so this is to the people in the room. Just be aware, we need to adjust. Scale at 7 points, right? Stop is 10 points. I know that's asymmetrical, but that gets us through the lunchtime. I want to stay out of New York lunch, right? And then I want to take my next scale at 15 points if I can get it, right? And at 15, I want to bring my stop to break even and hope the trade extends, right? And I want to keep doing that process over and over. And then I want to look within the structure more complexly, guys. Is there a head and shoulders? Do we have anyone trapped above or below, et cetera, to make these trades a little bit easier. I failed on this count today, and I'm pretty straightforward with myself. When I have a hard day, I go back and do the homework just like I'm doing right now, so that I don't have a difficult time moving forward, right? That's very, very important. One bad day or one off day is okay, but you've got to go and make the corrections, okay, so that you can trade well. So anyway, that's what I just did. It took me a half an hour. I have a very clear idea of what I want to accomplish for tomorrow, right? Was not happy about how I traded today. In ESCL, I'm ecstatic. ES, I'm not happy. So now I'm going to make the adjustments going forward and hopefully make plenty of money and continue what's been an awesome couple of weeks here. So anyways, my name is Simon. I'm with Trade and Perform Coaching. Please take your time and learn what you're doing. If you'd like it passed to the room, Trade and Perform, TRADENPERFORM @gmail.com. And all are welcome who want to learn. Let's go have some more fun tomorrow. Have a good night, guys.